OpenAI is losing its revenue chief days after another exec leaves, and investors are watching closely. The news cycle this week has been dominated by a specific type of corporate anxiety. OpenAI is facing what CNBC is calling a talent exodus that raises a huge red flag ahead of its anticipated initial public offering. The immediate trigger was the sudden departure of Denise Dresser, the chief revenue officer she hired from Slack back in December. Fidji Simo had praised her experience as vital for making AI useful and accessible. But her exit comes just days after longtime executive Brad Lightcap announced he was also leaving. This C-suite instability is giving investors another concrete reason for concern as the company maneuvers toward a mammoth public listing. Reports indicate that CFO Sarah Frier and President Greg Brockman are set to meet with OpenAI investors on Thursday to address these growing questions. To understand why this matters, we have to look at the timing. OpenAI is preparing for a massive financial transition. The company is moving toward a public listing that will likely be one of the largest in history. When a company goes public, the market demands stability and a clear path to profitability. The sudden loss of key revenue leadership right before this milestone suggests internal friction. Investors are looking for signs that the company can sustain its growth. The departure of Dresser and Lightcap is not just about losing two people, it is about the signal it sends about the health of the organization. The upcoming meeting between the CFO and president with investors is a direct response to this uncertainty. They need to reassure the market that the core strategy remains intact despite the leadership changes. Critics argue that this talent drain is just the tip of the iceberg. One commenter pointed out that the real red flags are much larger than executive departures. They highlighted the $380 billion loss in the business model as a primary concern. Others pointed to the circular financing and accounting practices that have fueled the company's expansion. There are also trillions in commitments that the company cannot actually spend yet. The concern is that the talent exodus is a symptom of these deeper structural issues. If the revenue chief leaves because she cannot find a sustainable path to profit, that is a serious problem. The market is watching to see if the leadership team can address these fundamental issues before going public. The community reaction on the artificial subreddit has been sharp and skeptical. Many users are waiting for the IPO to see if Sam Altman will finally be pushed out. The debate centers on whether his leadership style is unique or just typical Silicon Valley behavior. One commenter noted that he has a bad reputation even by those standards. Another pointed out that the previous board coup was less about Altman personally and more about the timing of a large fundraising round. That round brought liquidity to employees and provided necessary runway. The consensus seems to be that the talent exodus is a symptom of a larger cultural and financial pressure cooker. The community is watching closely to see if the new leadership can stabilize the ship. So what should we watch next? The meeting between the CFO and president with investors will be the first real test. Their ability to articulate a clear revenue strategy will determine market confidence. The stability of the remaining C-suite will be the next indicator. If more key players leave, the IPO timeline could shift. The talent exodus is a warning sign that the company is at a critical juncture. The market will judge OpenAI not just on its models, but on its ability to run a profitable business. The coming weeks will reveal if the leadership team can turn the red flag into a green light. We also have to consider the broader context of leadership trust. A recent New Yorker profile dug into Sam Altman and asked if he can be trusted with controlling our future. The article explores the concentration of power and the lack of checks and balances. This ties directly into the talent exodus. If key executives are leaving because they disagree with the direction or the management style, that is a signal. The market is not just buying AI technology. It is buying the leadership team that will steward that technology. The exodus raises questions about who is actually running the company and for whom. The upcoming IPO will force these questions into the open. The bottom line is that hype can only carry a company so far. OpenAI is facing a reality check. The talent exodus is not just a news story, it is a financial signal. Investors are looking for stability and a clear path to profit. The company is struggling to provide both. The meeting with investors will be a critical moment. If the leadership team can address the concerns about the business model and the revenue strategy, they may regain confidence. If not, the IPO could be more volatile than expected. The talent exodus is a warning that the company is at a crossroads. The coming weeks will reveal if they can navigate it successfully. OpenAI's talent drain is a signal. Watch the investor meeting. Stability matters more than hype. Stay sharp. NeuralNoisex out.